Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody. Guys, today again we will take a look at the euro currency, although we see also not bad setups on the Japanese yen and on the New Zealand dollar, but the euro currency right now stands in the center of the fundamental and economical global events, and we think that right now we may be stepping in the really big turmoil on the financial markets. And right now in this update we will try to explain our position. You could argue with it, you could agree, but that's just our opinion, and depending on what market will show in the nearest future, that will clarify whether we are right or maybe we are wrong. But before this will happen, before we will talk on the euro currency, I would like to show you some charts. Particularly speaking, I would like to show you the S&P. What we see on the S&P right now. A couple of days ago I already had shown you the double ripple sell pattern on the S&P, and right now you see the really big drop yesterday on the S&P market, on the economy, on the United States stock market. What this drop could mean, why it has happened right now, what the problem with the US economy, what the problem with the equities, with the situation in the US economy. So recent data from the United States shows the improving in the job sector, in the economy growth, and the retail sales, and the consumption. So economy stands turning on the growth stage of the cycle. What really the drop has followed? Why? So the one reason you could say that is because the Fed has intention to hike rates, and that could depress the activity in the United States economy. But the rate hiking is expecting approximately in the mid of the 2015, and that's not really the fact right now that this rate hiking will happen in this area, in this time. And the second question, whether we've got the information on the possible rate hiking just tomorrow. Absolutely not. So our thought is that right now we see the technical global money flow between the different markets, just trying to combine two events that should happen in the beginning of the next year. I'm speaking right now on the potential starting of the quantitative easing program in the European Union. What has happened during the quantitative easing program in the United States? So we will take a look at the greater chart, for example on the weekly chart of the S&P. You'll see that when the quantitative easing program has started, you'll see this rally on the S&P market. You already also know what has happened on the Forex market when the quantitative easing program has started. United States dollar has shown the real big appreciation. Although this is stand absolutely contradictory to the logic, because when a lot of money was dropped on the market, it should lead to the decreasing of the price of this money, and that is really should happen sooner or later. But why this hasn't happened immediately? And here is the major reason in the technical greedy of the market participants and how this money is spent on the market. This is a really long talk, but shortly speaking, in the short-term perspective, market investors and the big funds, banks, put this money in the assets to create the immediate profit and to satisfy it greedy. It was just simple. When the funds and banks have received money from the Fed, from the purchasing, from the buyout of the government sovereign bonds, they just put them in the stock market, and they just blow this bubble on the stock market by the funds that was prepared by the Fed as an idea for the real economy that should be invested in the loans for the really big factories, plants. But this hasn't happened. The banks just take this money and put them in the stock market and made the profit. Right now, the quantitative easing program was ended, and there's no really inflow on the market that could support this growth on the stock market. That's just one of the reasons, with others. Okay, and we see there's really a significant pattern that has been formed on the daily chart as the double ripple and huge plunge down. Or maybe this pattern will lead to some bigger pattern on the monthly chart soon. We do not know whether this will happen or not. What I would like to say is that now we stand in anticipation of the same program in the European Union. What does it mean? It means that investors already know what should follow after the starting of the quantitative easing program. It means that the same bubble should appear in the European stock market. And that's why we suspect that this really growth on the European currency could mean that investors start to prepare for this rally and they start to buy euros in anticipation of this quantitative easing program and trying to buy right now the European assets as the stocks, maybe some put the money in the funds of the stock markets and so on. So they would like to anticipate when the Draghi will start this quantitative easing program, take the position in the advance of this action. And this really could mean something important. Okay? That's our thought. That's just probably assumption. Because we suspect that it's not just a simple action, because there's no fundamental reasons for this action on the euro currency. What really has happened? The United States economy shows very strong data. It's they stand in the eve of the rate hiking, while the European Union stands just in the pit, the bottom of the pit, and no inflation, no improvement in the economy, decreasing of the forecast of the European growth for the next year. So just opposite courses in the economy, the European Union and in the United States. But euro currency is growing. And we think that this is mostly technical situation, but the technical, not in terms of the technical analysis, but in technical how just money flow impacts on the markets. In the long-term perspective, we will get the results from this quantitative easing in the United States, but this is very long-term, really big picture. The economy cycle, maybe a year, maybe 2 years, maybe even more will pass before we will get the result of this huge inflation, inflow of the huge money supply in the United States economy. But in the short-term perspective, this inflow, this money supply leads to growing of the markets, because investors have no choice. They just put their money in the assets wherever they could, and with attempt to make the profit. And as this money is really big amount of this money, they will put markets higher and higher. And that's why particularly this scenario could happen on the European markets, European currency. And this growth, as we said, could mean that investors have started the preparation for this rally and trying to buy euros right now to put them in the European markets before the quantitative easing will start in January. That's why currently we should keep this idea in mind and track the euro currency behavior from this point of view as well. And very often we will understand, do we right or wrong? Because right now you can see this recent rally market has shown the breakout of this trend line, breakout out of this wedge pattern. That could be the starting point of the free drive. Okay, but right now market has met with the monthly pivot point and daily overbought. It means that today market hardly will pass this top, and we should be ready for some consolidation. But on the next week, if market will continue move higher and reach the monthly pivot resistance one, that could turn to a pairing of the head and shoulders pattern here. You can see this butterfly. We have this butterfly, we have also minor butterfly on the forward time frame chart. Both of them could become the left shoulder of the bigger pattern. And if this will really happen, that will tell us that something is changing on the European currency. Anyway, we should not hurry, we should not panic, and we should not be scared that we will miss this opportunity, that we will miss the chance to take the part in this action, because this will be, guys, really big picture. And if quantitative easing will start, it will start for the long period. And anyway, current bearish momentum on the market is very strong because euro was depressed for a long period of time. And if even any reversal will happen, euro probably will show the deep retracement before this will happen. Now I'm hint on the possible right shoulder of this pattern, as you can see. That's why if even market will reach this area, we should not panic and we should just wait our chance when the market will show deep retracement before reversal. And that's what we particularly will be watching for. Now you could argue and ask me about the same 122 monthly target that I have mentioned for the couple of weeks, and said that I feel uncomfortable when we have the untouched target. That's true, guys, but you should understand that if we are right about the money flow from the United States market to the European currency, and that will be triggered preparation for the quantitative easing program, we should understand that this is not just normal market mechanics. That is really fundamental factors that could skew and distort the normal behavior of the market. In this situation, that really could happen, that market will not touch the target. And we will understand this very soon. So if market will turn down and continue move lower here, this will mean that probably our thought is not correct, and market still will have the chance to reach the 122 area. But if market will turn to some tight consolidation here and after that continue move higher, this probably could tell us that the scenario that we have described really could become the true scenario. Well, on the intraday charts for today, we see that market also have moved above the weekly pivot resistance one. And that also is the sign that's not just a retracement. As market has passed through the weekly pivot resistance one, it means that the previous bear trend has been failed, has been broken, and that is not just a retracement. At least we should be very careful with this. On the hourly chart, we see nicely looking butterfly right at our bot, this evening star pattern, nicely looking. So during today's trading session, we should be ready for retracement down. It's probably minimum target of this retracement stand at the confluence 124.24.20 area. Also, guys, take a look that if we will measure this recent retracement counted to this area, you'll see that approximately the same distance. That could be also take some sort of the ABCD pattern that will create an agreement with this area. So in the nearest hours, we probably should be ready for this retracement down, and we should not be too hard with the taking longs, because right now it's not best area where you would like to take the long, because you're at your bot and you're at the monthly pivot point. If you still would like to take the long position, it's better to wait some bounce down, at least to this confluence, and let's see what will happen. But guys, currently I suspect that really some big changes could happen as soon as we will come to the announcing of the quantitative easing program in Europe. That also has relation to all markets across the board, to the S&P, to the gold market, because in the gold market we see also significant rally and closing of the shorts position in the United States dollar, and maybe some outflow from the United States assets will follow. So we will see what will really happen, because it's much easier to make money on the rally on the quantitative easing program in Europe rather than the United States right now, with some uncertainty concerning when Fed will start to rate hike and what will happen with the stock market, how what impact we will get from the previous quantitative easing program as it has been closed, and when the Fed will start the rate hiking cycle. So it's a lot of uncertainty comes from the United States markets right now. That's why I think that investors will seriously think on the European market is the more clear opportunity for investing in the short-term perspective. So depending on the behavior of the euro currency in the nearest weeks, we'll understand whether we are right or not.